Welcome back. You're watching Trending Today. Siddharth Purohit, Senior Equity Research Analyst at Angel Broking, is joining us now. Good morning, Siddharth. Good to have you on the show. Let's start off with your first reactions to the almost 8,500 crore bank recapitalization number. This is in line with estimates. IDBI Bank gets 1,900, Bank of India gets 1,500 crores. I mean, are you of the view that this number needs to be much higher from the current allocation?
Yeah, hi. In fact, if you remember, during the budget, the government has announced that they will be providing 10,000 crores as recapitalization for this year, and another 10,000 crores for FY19. But the year even they had mentioned that subsequently, if capital is required, as and when required, it will be provided based on certain criteria. And this time around, the absolute number certainly is not really very encouraging. If you look at 8,500 crores for the 10th set of banks, all the banks mentioned here have very low capital adequacy. If at all they want to grow, this is not going to be enough for them. Now, but one interesting point over here is that the government has clearly mentioned over here that subsequent to year onwards, the incremental capital allocation will depend on certain milestones to be achieved by the banks. And that is kind of how NPA's situation improves for that particular bank and whether they are in a position to raise capital of their own. So indirectly, the government had been earlier saying that you also have to arrange your own capital for growth in addition to what we are providing. So here the clear message is that banks will have to make themselves able to raise capital for future growth. And the government may not keep on infusing significant amounts on a continuous basis. So if you just compare the total amount that has been allocated today, the announcement, so certainly it is not a very big amount, but certainly as per the plan of government. So if you just have to analyze what is the prospect for the PSU banks, then the clear message is that they have to reduce their NPA issues, they have to go for more recovery and make themselves able to raise capital from the capital market at a efficient pricing. So the amount certainly is not very great, and possibly government might have to raise the amount at a later stage if PSU banks have to really grow their balance sheet from here onwards.
Right. So that we've spoken about this before, and you said that the government is trying to egg them on and trying to push them and urge them to find sources of raising money for their own selves. But fact remains that unless and until profitability improves or the PPOP improves, your ratings would not improve. And unless and until ratings improve, they would not get favorable coupons like an SBI gets for raising AT1 capital. I mean, that avenue has been completely dry and not anything close to what it should have been. Insurance companies, pension funds who have the appetite have hardly subscribed to those issuances. And it's difficult in a time of lower profitability. What are the other sources? I mean, it's a difficult time, right? Unless profitability improves, to tap other sources?
Yeah, yes, certainly difficult because looking at the profitability or maybe the kind of stress that is still left on their book, I don't think it's going to be really easy for all these set of PSU banks to raise capital from the market. So till that time, possibly they will have to depend on government. Just if you go by the numbers, let me tell you that out of the 10 banks that they are supposed to receive funds, almost all the banks, all the banks have GNPA ratio in the range of 12 to 15%, and net NPA ratio of somewhere close to 9 to, and the highest being almost 14%. So there is a lot of NPAs yet to be provided. So what these all banks can do is that they will have to pursue aggressive recovery and upgradation mechanism, wherein possibly future capital requirement will be little lower. So they will have to first prove that there is an improvement on the operational side, and possibly after that government will give higher capital allocation, and also market will give them some benefit of doubt that improvement is happening, and maybe they'll be able to raise capital. Till that time, I think it is going to be quite difficult for this set of PSU banks to raise capital from the market.
Right, so that very quickly before we let you go, it is a difficult time from all angles. I mean, there's pressure from the MCLR. Banks are cutting down the size of their corporate books. There's talks about agricultural loan waiver. There's problem on the retail side. NPAs are rising. And in this environment, to add insult to injury, the best of treasury gains are behind us. Do you think at this time will moves like allowing incremental portions to be shifted from the HTM to the AFS book or the HFT book are required at this point to at least book gains, the MTM gains that some of the portfolio is still in, because a lot of it has been eroded, right? Because the price fall.
Yeah, in fact, if you saw in the February, during February when the RBI said that possibly they hinted that in the near term there may not be any rate cut and they are coming to a kind of an liquidity neutral kind of thing. So accordingly, bond market reacted, and we saw 10-year G-Sec bond yield, spiking up sharply. So last 2-3 quarters, they had decent amount of treasury gains, but this quarter maybe some PSU banks might end up showing MTM loss also. So don't know exactly how that can be treated, but that easy way of booking profit on treasury is not there for this quarter. So the core operations has to really reflect for this quarter and going ahead also.
We're going to leave it at that, but appreciate you joining us with your quick take on what you feel about the recapitalization number, about how it has been allocated to different banks, and what the critical and essential requirements are for recapitalization going ahead from here on. With that, it's a wrap. Thank you so much for watching.